Is Bitcoin going to follow a price cycle next year, which would be a downturn? And is Bitcoin going to diverge from the equity markets?
One of the most persistent narratives in crypto is the so-called 4-year cycle tied to Bitcoin's halving events. Historically, halvings, when Bitcoin's block reward is cut in half, have preceded major bull runs followed by painful corrections. Tom Lee acknowledges that reflexivity plays a big role here. Since Bitcoin is decentralized, with no central authority shaping its information flow, price itself becomes the narrative. Investors see patterns, trade on those patterns, and in turn, reinforce them.
I first started writing about crypto, advocating for Bitcoin in 2017. Well, Bitcoin and Ethereum. And we were recommending our clients either do 1% to 2% in Bitcoin only or split 1% in Bitcoin, 1% in Ethereum. But in our view at the time, that 2017 moment for us was the idea that Bitcoin was going to be viewed as digital gold. So a really simple argument. We could explain that 97% of the price of Bitcoin came from just wallets and activity, but really the idea how Wall Street would adopt is digital gold. And that was 2017. It feels like that's 3 or 4 generations ago for that, and recognizing that environment 100%. In fact, when I was at JP Morgan, there were many conversations about Bitcoin when I was the chief strategist, and we had our macro calls. Which
I remember that.
Yeah, and our FX strategist at the time said that Bitcoin could become recognized as a digital currency someday, but the problem is that it's principally used by drug dealers and the dark web. So it was really deemed as a experiment, but only used for nefarious ways. Although people forget that pirates basically innovated gold. So I think it would have been impossible to actually have a view on Bitcoin and a firm like JP Morgan allow someone to actually publish the white paper we did publish in 2014. I know we also faced commercial setbacks when we wrote that first white paper on Bitcoin, and Bitcoin was under 1,000, but we said by 2022, so 5 years forward, the range of fair value was 22,000 to 66,000 for Bitcoin. But we said that, if you triangulate it, it would be roughly 25,000. We had clients actually cancel service on us. So we had some hedge funds famously tell us that they knew that we were so desperate that we lost all of our credibility because now we were talking about internet money as if it was a legitimate asset class. So it actually hurt us. And it probably didn't become a benefit for us as a company because we committed resources to it continuously since then until maybe 2021. People talk about a crypto cycle and it being 4 years. There's probably some reflexivity at work because the original genesis was that, Bitcoin had a halving cycle. And so people were talking about a price cycle that really followed a Bitcoin in a halving. But in crypto, as you know, because there isn't a company, it's decentralized, and there's no centralized source of information, price itself often becomes really important, especially in the early days. So I think that there was a lot to people looking at patterns and then markets trading on those patterns. And the reality is that it's still true in the equity world because I can't tell you how many of our institutional clients still look at seasonality, which is just applying a calendar to what price action could be, either whether it's credit or volatility or equity. So every element of liquid markets today. Crypto strategist Sean Farrell still writes about the 4-year cycle, and it probably doesn't matter between now and the end of the year, because in any case that we should be seeing a lot of strength. But I would say that the real test, there's really 2 tests that will come up. Is Bitcoin going to follow a price cycle next year, which would be a downturn? And is Bitcoin going to diverge from the equity markets next year? And I think that there's a chance that both take place, and that's why we'll be talking less about a cycle because, as you know, Bitcoin also historically followed equity markets pretty closely too. Being theoretical, because I'm not necessarily calling for a correction or a crypto winter. The past crypto winters have been really painful. Drawdowns or declines for Bitcoin from the peak of more than 70%, maybe 90%. And the altcoins and non-Bitcoin doing far worse.
This makes intuitive sense. When liquidity is abundant, speculative and growth-oriented assets thrive. But Lee sees a second narrative emerging beyond just liquidity. Originally, Bitcoin was seen through a narrow lens: digital gold, a risk-on asset, and a hedge against distrust in institutions. Now the narrative is shifting toward institutional sponsorship and even government alignment.
I've seen those charts with global central bank liquidity and Bitcoin, and Raoul Pal, I think advances at 16 months, and it's been pretty dead on in explaining crypto. And so I would say that in my mind, it's intuitively logical that global liquidity is a reason why crypto prices do well. Okay. But I think there's a second story arc developing in crypto, which is that was also true when the singular narrative for crypto was, well, it's digital gold, or it represents a vector of trust or of risk appetite, plus it trades 24/7. And so that's why we want to look at it. And maybe that's why people look at it and describe Bitcoin. But now I think that the narrative is changing for a couple reasons. One would be the institutional sponsorship of Bitcoin plus government sponsorship. To get you a template on that, look what happened to venture capital and private equity. Venture capital used to be very predictable cycles, and private equity too, because it was primarily family offices buying it and selling it, and it was very short cycle, and they couldn't, they never really raised a lot of money. The minute it became an institutional sector, it has completely transformed the cycle in venture capital and in private equity. There hasn't really been a private equity cycle since you've had institutional flows into the private equity sector, and now private equity is larger than cash equities. Look, we know at the micro level, debt is what strangulates a business. I mean, like, let's just take Meta. Like, let's say you have Meta, and it's the best company in the world, and if their balance sheet had debt to sales of whatever 500% or 300%, it would be very difficult to operate as a company.
Sure, absolutely.
Because the CFO is worried about the debt all the time, and they're going to make suboptimal decisions. So capital asset cost to capital models all go out the window, because when you have too much debt, it's essentially crowding out the ability of that company to operate efficiently. So I think that there should logically be a break point where nations or economies or governments become strangulated by the debt. UBI, okay? And I'm going to introduce a strange concept, but I actually think crypto is already proof of UBI, because Bitcoin and Ethereum are already examples of UBI. See, people bought these things early, and now they've created, have enough resources passively without actually doing any work, except being, a believer in the community, that it pays for their own subsistence. I mean, in many cases, fabulous subsistence, but it's actually, I think crypto is UBI in that argument. It's maybe it didn't reach everybody, but everyone had a chance for that. And in the future, there'll be, I think, future crypto that creates UBI as well. I'm not trying to break the laws of what's legally contractual obligations, but I think we're seeing microcosms of how debt problems get solved through something as simple as a stablecoin, because we know that the stablecoin, which is backed by actual dollars, but as we all know, it becomes circular because it's a dollar. But the stablecoin issuer is then taking the pledged assets to buy Treasuries. They're becoming a buyer of Treasuries. So in other words, like, stablecoins are providing essentially a permanent financial stability, because the largest holder of U.S. Treasuries today is just Japan with I think Japan's like 1.1 trillion of Treasury holdings. I may not even be that large. So it's not that many orders of growth before stablecoins are larger than Japan as holding U.S. Treasury.
Tom Lee's journey with Bitcoin is a lesson in conviction. From being mocked and losing clients for even suggesting Bitcoin could be legitimate, to seeing it become a mainstream financial asset embraced by Wall Street and global institutions, his story reflects the broader arc of crypto itself, from ridicule to resistance to recognition. His insights remind us that Bitcoin's story isn't just about price targets or halving cycles. It's about liquidity, debt sustainability, institutional adoption, and the possibility of crypto reshaping wealth distribution on a global scale.